That was the Finance Minister, Dr. Kasiel Atuforsen. When he was in Parliament presenting the budget. In studio here is the Honourable Seth Terkper, the President's advisor on the economy. And joining us on phone is Joseph Obeng, who is President of the Ghana Union of Trade Associations, GUTA. Joseph Obeng, good morning, and thank you very much for joining us.
Good morning.
So I realize that you have a lot of concerns with the VAT and, increasing of the threshold and the scrapping of the, flat rate. Tell me, what are your concerns?
Thank you very much. Before I say anything, I want to commend the government for its efforts to stabilize the economy. We don't take it for granted, the fact that government has taken it from a very big problem. If you look at what we went through the year 2022 through to 2023 and 2024, most of our cartels were depleted. And so we are very grateful. And for the resolve that is shown by the Finance Minister and the economic team to sustain these gains is very commendable. So we thank government. The establishment of the Women's Bank has also come at the time that we need it most, because our women food are losing most of their capitals through extortive rates from the microfinance system and the social systems in the market. So definitely the budget had a lot of good intentions that the traders are happy with. Our major concern has been with the challenges that the reforms will bring with regards to the VAT. Fortunately, there have been very significant reforms that have been taking place, and the decoupling of those straight line levy and then reduction of the COVID levy all have made it a very simple and very conducive start for all of it. So I have to establish that. And so the challenge is where we have to find a solution to. Now, by removing the threshold from 200,000 and increasing it to 750,000 means that a lot of the taxpayers at the informal sector are going to be exempted from tax payment, and then it means that the market is going to be segregated into those who pay the VAT by virtue of the threshold, those who pay and those who do not pay. So the market is segregated. Don't forget that we trade in the same vicinity and the same geographical area. We trade in the same commodity lines, and in the market, our structure is almost the same. Now we do not have anything like tabletop operator or small shop, because they all go to Dubai, go to China, and by virtue of the size of their store, you might think that we are not operating the same. And so that's the problem. What it means is that there's no compulsion on the part of the consumer to collect this VAT when they go to the market. They have their discretion, and any rational customer will not buy from the person who's paying who is charging the VAT. That's the problem that is going to create in the marketplaces. Fortunately, GRA has just introduced the modified tax system, which is very good, very simplified, and very conducive and user-friendly for the informal sector. We thought the government would have been bold to cut it across the informal sector for all of us to have the parity, the fairness for us to do our trading, rather than this segregation. It's not going to help at all. It's not even going to help compliance, because nobody will sit down in a shop where his neighbor or competitor is selling at a cheaper price by way of not charging the VAT, and he charging the VAT by 20%. Don't forget that our rate at the informal sector had been 4% flat rate. And so, whilst people are saying that the rates have come down, maybe by it was reduced by from 21.9 to 20% for the very formalized supermarkets and then the wholesalers. It does not apply the same to the informal sector where we are paying 4%. Now to 20% at places we are going to charge VAT at 20% at places like Makola, Okanshi, Mankasim Market, and Tachima, this place, KJTR.
Yeah, Joseph Obeng. Yes, Joseph. Before you continue.
Yeah.
Now you keep saying the informal sector was initially charging 4%.
4%. Yeah.
I want to understand that, because my understanding of the VAT flat rate scheme is that if your annual turnover was, say, 200,000 to 500,000, you were charging 4%. It did not say wholesale that if you are informal, you charge 4%. So where
no.
That understanding?
That's not how it is. You can consult with the GRA people. The 200,000 threshold is taking away those whose threshold or turnover is less than 200,000, and those whose threshold is above 200,000 to unlimited amount in the marketplace is to charge the VAT of 4%, structured for the informal sector places like the places that I talk about. And so that has been the norm. And now, if you shift the threshold of the exempted tax people from 200,000 to 750, it creates a space and it segregates the market where those, unless they are saying that in their thinking, those marketplaces and all that, the vicinities, the geographical areas that I'm talking about, are all going to be exempted because they assume that they operate under 750,000 threshold.
Okay.
But if they also acknowledge the fact that in the market there are a lot of people who also operate more than 750,000, then of course it's going to create the distortion that I'm talking about.
So
these are the things that
Joseph,
we have
Joseph, just
look
listen
at
to something.
Objectively.
Just listen to something. So if you check now, this is actually the GRA, but I'll let Honorable Seth Terkper explain further. But this is the GRA saying the VAT flat rate scheme is a special method of collecting and accounting for VAT NHIL. It is designed for all VAT registered retailers of taxable goods with an annual turnover of more than 200,000 but not exceeding 500,000. These registered taxpayers will charge VAT and COVID-19 levy at a marginal rate of 4% on the value of their taxable sales. And so that is it. And it's actually a flat rate of 3% and COVID-19 rate of 1%. But so that's about, let me let Honorable Seth Terkper explain it to you. He's the tax expert. He's been finance minister before. He understands all of these things.
I wanted to clear what I said. The first, what DRA has said is true. So what I said was a slip, but it is beyond 200,000. Those below 200,000 are exempted. But when you come to the marketplace, everybody was saying charging for 4%. Where those people they took to the standard rate, they applied that they cannot sell because of the 20% charge, and then they write to GRA, and then they are made to pay the 4%. That has been the norm. And so now, if you take us back to the same thing, are we able to apply for? Because there's no room for the flat rate. Fortunately, we have the modified tax system that gives us this simplified way to file our tax at the end of the year and all that. If these people operating in the same geographical area, the same vicinity and all that be made to pay, then there's a fairness. Because taxes should not be discriminative in any way. Taxes, the way the tax system is being collected shouldn't be punitive to other taxpayers, especially when we are door to door with each other and we operate in the same commodity lines and in the same form of businesses. That's what we're talking about.
Okay, so hold on. Let me bring in Honorable Seth Terkper so he can explain a few things to you. Yes, Honorable Seth Terkper, he makes the point that they were paying 4%, and now you have a situation that you say you've increased the threshold from 200,000 to 750,000 annual turnover. And so what it means is that for those persons, they are not going to be charging VAT. But for them, they would have to charge VAT if they actually have a turnover of more than 750,000 of 20%. But previously, his understanding was that the 4% applied to the informal sector. And so that was better. All of them were doing the same thing. Now there's some discrimination, and that's going to hurt them.
The informal sector, good morning to your viewers, listeners, and to Doc. The informal sector is used in many countries, but you will not see it in the tax law. The tax law does not call anything informal sector, but it is recognized that we have informal sector. And the informal sector are tabletop, as it's a tabletop, traders, usually again, where literacy is low, and therefore they will find compliance with the tax law, too complex. And also that because they are small by nature or by definition, they are unable to employ accountants, even a person who would prepare their tax records. So the law says that the law is not recognizing the informal sector. The law is saying that since the tendency is for most informal sector traders to also be small-scale businesses, if your turnover does not exceed, right, it doesn't matter whether you've been to school or not. If your turnover does not exceed now 750,000, right, then it is assumed that your annual turnover, which is in lieu of your calculation of profit and everything, will be subject to a rate of 4%. Now, the GRA tax offices do not indiscriminately assume that everybody is operating. Let's use the 250, which no. That's why they issue what used to be called standard assessment or presumptive tax for the income tax. Yeah. And then the VAT you'll be compelled to pay. So we are talking about two taxes, one on the income tax, one on the VAT, which are the broadest on consumption and on income, which almost anybody, has to pay. Now, for VAT, that prevented you from claiming input tax credits. Right. Now, I think we shouldn't confuse non-compliance with the law. Right. Non-compliance with the law. Particularly because we do not have a comprehensive domestic tax software and system, which we are now calling ITAS, which is to come, compared to the, ICOMS. So, if I take the members of, say, GUTA, right, in all probability, you are not applying the flat rate because you belong to GUTA. You are not applying the flat rates, So GUTA may be made up of taxpayers whose turnover is above, the 250, and now to be 750. And I think that's a reality.
Yeah.
If you go to if we had a comprehensive income tax system with your tax identification number and everything, since most of them are also importers, ICOMS will show that their turnover for the year, you are talking about the year, the imports, which is the cost, before they even add, domestic costs, and then add profit margin and whatever, you are talking about total annual turnover. It's likely to be above 250 million. So the fact that we do not have the comprehensive system to be checking, business activity, the fact that they operate alongside the informal sector.
So if I get you, you're looking at how much they make.
That's it.
From their sales.
Yes, and the presumption is that you can't keep records.
Mm-hmm.
Now, that is why when your turnover exceeds the threshold literate or illiterate, formal or informal, you must register for VAT.
Okay. Now,
okay. Now let me make another point.
Yeah.
That's why you must register for VAT. Then your method of accounting changes. When you import, you pay VAT at the port.
Yes.
When you sell, you have come to add margin. So let's say you import 200 to simplify it. You add your margin, you add your expenditure, everything, and you sell at 250. Right? You would have paid, let's use 10% to simplify it. So 200, you would have paid 20 at the port. 250, you would have paid 25 domestic. But in that 250 is the 200 on which you had already paid the tax. And this is where the value addition comes in. So since you are paying tax at 250 domestic, but that 250 has 200 on which you have paid 10, you will be allowed to deduct the 10, right? Sorry, 20 from the 25, and you pay only 5. So from the perspective of GRA, when you file your return, you've collected 20 at the port, and you are now paying a net of 5, which means your total value added, that's how the name of the tax become 25, right? The person who does not keep record, right, and is in the informal sector, including those who may have bought from the same goods as importers, right, may not have a turnover, assuming it's engine spare parts and the rest, so they are not capable of buying large. So you bring in 200, they come and buy, let's say 10 or 15. You know, if you had 1,000, right, they are clearly below. But you, the importer, you fall. So I think it's important for us not to confuse, you know, the presumptive tax for income tax, you know, and that is the presumptive tax, and the flat rate with formality or informality.
Okay.
The law says turnover.
Okay, let me
the reform is that now, instead of paying a separate, those in the informal sector, those whose turnover fall below, many of who are in the informal sector, our local market center, instead of paying a separate income tax, presumptive, and a separate VAT 4%, the law is combining it and say just pay one. Because if you cannot keep VAT records, in no probability you cannot get
modified tax. Yeah.
And it's not new. The modified tax was actually in the VAT Act of 2013, I think 2013 or 2015, the one that is operative now.
Okay.
Sorry, it was in the Income Tax Act.
Okay.
Right. And it stated clearly that it's in lieu. But it was repealed in 2017, and the flat rate was brought back. Right. And many countries are shifting in that direction to make it easy, you know, for small businesses with low turnover to comply with the law. So it's a compliance, making it easy for you to self-assess, making it easy. As for your turnover at the end of the day, you know it. That's your total sales. That's what it means. Turnover means your total sales.
Yes.
So if you have a small business, you know, and at the end of the day, let's take it for granted that I make a turnover of 10, right? Take out weekends because I don't go Sundays and the rest, and I end up with 220. If GRA comes, GRA is not necessarily saying pay 25. If you can prove that your total turnover based on just your recording of sales is 150, then you pay the tax on the presumptive rate on 150.
So if I get you, what we are currently experiencing is actually what he's complaining about. Beg your pardon. Is actually an improvement on the previous situation.
Absolutely.
Let me listen to...
Which is one, an improvement in the sense that, one, like the income tax threshold, right? And let me explain this. The threshold where you don't pay any income tax, 0. And then it goes up, you pay 5%. You know, your income goes up, you pay additional, you know, then you start paying 5%. It goes up again, you pay 10%. Then it's 15, and you end up at, say, the top 30. And everything else is at that rate. That's your marginal rate. You are entitled to all this. Now, if you don't adjust it for inflation, right, if you don't adjust it for inflation, let's take low income, because it's graduated, and every business has it. So take this studio, where there are those who are earning low, let's say in the cleaning and other category. There are those who are mid-range, right, who are doing clerical and other jobs, and the rest. If you don't adjust it, and you get your salary, right, increase, assuming you are at say 200, and you get your salary increase at 250, the inflation is 15%, right? It means that you are going to be taxed at 250, assuming that the inflation rate is static. Meanwhile, when you go out to buy, that 250 may be buying goods which were worth 200. That's why it's adjusted. I hope I'm making my... Yeah. Similarly, for purposes of inflation, the turnover is increasing, right? And that is why it is important to adjust it. Because if you do not adjust it and you remain at 250, and you are taxing even the flat rate, the old flat rate, it means that you are not taking account, of the fact that those who are buying and selling are also affected by inflation.
So if I get you clearly,
and that's the reason why you increase it.
Yes. So if I get you clearly, because of inflation, as the period goes by, you're going to be increasing the cost of your products. So over a period, your turnover also increases. So it is the expectation that as the turnover increases also, then the threshold must also increase.
Because it doesn't make you necessarily, the fact that inflation has increased because you are buying and selling, increase your turnover, doesn't necessarily mean that it has made you, overnight rich and certain. If you hold the currency constant, you are affecting, you are being, and this is where equity, this is where other principles of taxation come in.
Okay, please hold on for me.
So it is to recognize the fact that even the small taxpayer, right, who is in that category, let's say in the informal sector, right, that turnover is affected by inflation.
Okay.
And that's why, ideally, every year when the budget is read, the bands for income tax, right, and in fact, it includes even if you're paying tax as 15%, right? The bands should be adjusted to inflation, and then the turnover should be adjusted to inflation.
Okay.
Yes.
Joseph Abeng.
Boss.
Do you understand it?
No. Please. I think we have to try and understand ourselves. Much as I understand Minister to some extent. They will also try and understand it. We know that taxes are not made on assumptions. We do not assume, because from what he was saying, those 750, those above 750,000 are the GUTA members that you are talking about. And who are those below the 750? We are all one. And then he's also assuming that once you trust, you pass the 750,000, you are an importer. So therefore, you have an input tax.
No, he doesn't say that.
Please. No, I didn't say that.
No, that's what he said. He said that when you import.
I was using a GUTA member who is an importer.
Who's an importer?
You can have a GUTA member who is domestic.
Exactly.
Yes,
Thank you. Okay, let's move on. So what we are also saying is that the standard, the flat rate did not come by chance. It came because of a problem. The problem being the lack of the input tax for those of us in this sector, because like we were trying to say, not all of us import everything in our shops, and so we buy the goods. The cross-border trading that we do in our space. That's what most people do. The Nigerians who bring the goods from Nigeria, those who bring the Togo goods and all that. And these are the goods that we also buy and sell. And most of these people are not taxable, VAT registered people. And so we do not even have, most of the time, the input tax. That's why we ourselves, it's from our own self that we propose to GRA, that because we don't have this input, it makes it difficult for us to even to go into the standard rate. And so do everything to make sure that everybody who imports is VAT registered person that can give us the input tax. And that's why they formulated the upfront VAT. But what is happening is that even with the upfront VAT, because people do one-off business and they are not even staying in this country, somebody may be in Germany, UK or US, and will bring something in for one-off, and that person do not have to register for VAT registration, so that you will file the VAT. So you pay the upfront tax and then just give the goods to us without any input. So this is how our sector operates. Not like the bigger supermarkets who we know they import thousands upon thousands of containers into their place, and that they have the input tax for them to calculate the input and output. Aside that, we have been paying the flat rate for only God knows. The flat rate has been from 2017, and most of us, the receipts that we have are all flat rate and all that. How is it going even to translate for you to be able to calculate the input and output tax? So we have a genuine problem here, and it should not be said that maybe Guta, as usual, make noise when anything is being introduced. But then it shouldn't be proper. And then I know Honorable Seth Terkper is very much aware of this segregation that I'm talking about. And it doesn't bring fairness. It does not bring parity for businesses. Because tax should not be discriminative. From his own submission, he said that countries do not even recognize that informal thing. But because if we are all operating in the same space, the same commodity lines, and the same way of doing the business, some of them will go to Dubai, some of them will go to Nigeria, and we operate under the same way. We collect goods from the Nigerians, and then the other other suppliers from abroad who do not have the input, and that's what we operate the same way. So how are we going to define? In any case, how are we going to even define the threshold? And then it's also
Joseph,
going to also create a situation
yes,
where
Joseph,
people are going to be suppressive of growth.
Okay.
That they would then dodge and come, and everybody is going to create a problem. But when everybody say that, okay, my threshold is 750, and then he put a fund or find a way to come from the 750 to this, then you see that it's going to create problems. So that's why we need a uniform system, a flat system. If even you said that, okay, we should pay 4% is too low. You people are going to pay 10%. All of you should pay, and then it should be flat rated and all that. It solves the problem.
Yes, please hold on.
And then it will also allow most of our traders to learn how to even
to explain a few things to you. Please hold on. Joseph Obeng, who is president of Guta. Yes, Honorable Terkper. You
now,
want to explain that?
Yes, let me explain two things. First of all, how do we arrive at say 4% as a flat rate?
Tell me.
Now, remember, let me use the same example. I take the 200 which the importer brings in, on which, let's say, we are using 10% just to simplify it, on which a VAT of 20 was paid. That's 10%. Right. Now, then the one who buys from him at the 200, right, adds value. That's the name of the tax.
Yeah.
That is profit, transport, salary, all the costs of a businessman, right, plus the profit that they will make. It becomes 250, right? So it becomes 250. Now, remember that you are dealing with, let's break it, you are dealing with two people, one who imported, another one who buys from the importer and is selling. Now, the turnover which the one who is on the domestic side is 50, because they are adding on 50, and that's their, you remember, plus profit. Right? Their total turnover becomes 250. Right? Only because they are adding. Right? They are adding the 200, which is somebody's cost.
Exactly.
To become. Now, so the law says this person, cannot, or there's not, or it will be too expensive. That's another way of putting it. For him to keep all the records, tracking how much, getting invoices from the one from whom he's buying, getting invoices, keeping records of his, they probably have just a notebook or something where they do this. But it is easy for you to keep records of only your sales for the day. Right? Let somebody else keep the cost. Right? Now, if we impose 25% VAT, the 10% VAT on the entire 250, right, we will be doubling. That's what we call the cascading. It will not be fair, because the person has added only 50, right? So the law says, since somebody has paid part of the tax already and you are unable to keep records, right, you pay 4%, not 10%, to represent, all your obligations of VAT. And the same principle with the income tax, right? Because if you cannot keep the VAT record, you cannot keep. If you are deemed not to be able to, and I use the word deemed advisedly, because there may be people who are capable, who are doing large business, and who may be in that community. We are talking informal, who should be flashed out to pay their, proper, taxes. So the rate is reduced to recognize, because you are not claiming input tax credit. Remember, the VAT mechanism says that you keep the invoice for the 200 when you buy, right? Which is a purchase invoice. When you sell, you keep the invoice, for the 10%, that's 25. And then when you are counting, you deduct 25. Right? Sorry, 20. From 25. And the tax you pay will be 5. Why 5? Because GRA Customs has collected 10 already.
Because
exactly. So what you are paying in actual fact,
so
what the domestic,
what your business paid
is 5%.
You're able to take it away. What you paid at the time that you were getting the goods.
Yes.
Before,
but because you are not keeping records, it is recognized that money has been collected already. So you pay, only 5% or 4%, which approximates, to the amount of tax which is on only your margin. That is what you have added. And the same thing is also done for income tax, which we used to call standard assessment. GR is the one that presumes, based on the cluster, they use various formula to do all this. Now, so 2 steps. The law is taking away the old income tax presumptive regime, taking away the old flat rate, and saying, since you are obliged to pay both, and we want to simplify the records for you, pay the modified rate, the new rate, right, which is uniform. And then once you pay that, you don't have a VAT obligation and you do not have an income tax obligation.
Okay.
Right. So the 2 points is that we shouldn't confuse the fact that VAT is value added. We shouldn't confuse the fact that it is meant, the flat rate is meant for small businesses, irrespective of literacy. Right. Because if you are doing big business and you are in the informal sector, right, and you are earning, that's where another principle of tax comes in, equity. Because in all probability, you are making more profits than the teacher, the employee, whose tax is being withheld at source, just as customs is withholding part of the tax at source. Right. So we have come a long way with the VAT. And I think that, may I humbly suggest that, GRA is doing education. There should be a special session, with GUTA, on these steps.
Okay.
So that I think the members can understand that what is being introduced is to their benefit.
Well, the GRA launched the National Sustained Tax Campaign
Campaign,
application
yes.
recently, and I'm sure that Guta will be one of the areas they'll go. We need to go for a quick break. When we return, also, we get into the conversation even about our revenue targets. And now that we are, scrapping certain taxes, how are we able to achieve these targets? It's about 250 billion, for 2026, Honorable Seth Terkper. And the question on the minds of many Ghanaians is that, is this feasible? Now that you're also reducing the tax handles, how feasible is this target?
Well, another way of looking at the feasibility of the whole thing is that our revenue performance has either remained flat, right, or has been declining. Especially if you compare with GDP. So it means that, one, we were collecting at a point in time a revenue to GDP, which was higher than what we may be doing now. So it means that we had that capability before. Now, the second one we have to use to challenge ourselves is that, as the minister said, there are African countries. Ghana is now a lower middle income country. His Excellency was saying recently that we are likely to become an upper middle income country. I think it's catching up that Ghana could become an upper middle income country. And what does that mean? It means that we must improve our own revenue and our collection systems, because we are not going to be getting so much aid. It's like a child. If he finishes school, his any income and whatever, you don't keep sending the, money. In return, in our tradition, he has to be, catering for you when you're in retirement and others. So the second point, therefore, is that if there are countries, Kenya, let's say our league, Rwanda, and the rest, we are even in a higher league, as a lower middle income country, and some low income countries that are doing a tax to GDP ratio of say 17.5%, and we are at 15%. We should tell ourselves as a nation that we are capable, because at one point in time we were leaders in many of these reforms. In fact, my own former boss, Dr. Labisian, who actually worked with Mr. Hoy to start many of these, semi-autonomy for GRA and all, became the Commissioner General for Uganda after their war. Yes. He also became the Commissioner General for Rwanda Revenue Authority. Worked in Ethiopia before coming. Are we saying that if some of these countries, including Botswana, which is doing a big effort, and Morocco and the rest, who are performing better than Ghana, all right? Mind you, I'm not comparing Ghana, therefore, to, advanced countries, to our counterparts who are moving ahead of us, Cote d'Ivoire and the rest. It means that we are capable. It means something has gone wrong. Therefore, if you, and I urge people to download just a speech. The budget may be just, too big for you to read. The speech, the speech which the minister delivered summarizes some of the points that we are making, right? And I think that over a weekend you can read the whole thing. Now, if you go to page 30 of that speech, page 31, he gives further fiscal measures and structural reforms that will be undertaken, including, automation.
Okay.
Right. Automation is important because, and let me try and be practical to give you one example.
Please do.
My favorite, which I often give. Right now, if you go to most shops, and GRA is doing very well in that regard. When you go and eat in a restaurant, you shop and everywhere, because of the automation of the point of sale device, you are given a receipt that shows all the taxes that you have paid.
Sure.
Remember, during the campaign, His Excellency had a receipt which he was, counting, and that's how come the realization that we must remove many of these levies because they are distorting, the tax regime. Now, yes, you have paid the domestic, the restaurants. Let's say, if I did adverts with multimedia, you give me you are to charge me, the relevant taxes. You indicate all of those. Now let's take importers, and I'm not, hitting on importers for that matter, but that is a weakness that we have.
Yeah.
You saw them officers, which the minister himself was saying. Now, when you import, you pay import VAT, and then when you sell domestic, you offset. In the last example we were giving, you offset, the 20 you paid, to use that example again, from the 25 that you collected, and then you pay 5 to GRA. Where is the system domestically? That 25 is captured. But where is the GRA system that is comparing, right, the VAT you paid at the port, which is captured in an automated GRA system, ICOMS, right, with the VAT you pay domestic? That is ITAS, and that is one major reform.
That's
which is going to be
we're about to do.
Yes, it's even a conditionality in the IMF program.
Yes.
But need we wait for the IMF? When we have done GIFMIS, we've done, and we had VIFs, which was the VAT processing system and the rest. Why should we even wait for the fund to tell us to do that? Right. So I'm saying that as the tax examiners go to the field, right, and I'm using this as an example, if we do the ITAS as the minister has said we are going to do, then when the tax examiner is going to the field, the integrated GRA system, which is going to be implemented now, will download your information using your tax ID number, your tax office number, and whatever, for the domestic tax department. That's the customs division. So before the officer goes to the port, he is holding information that shows that you have paid, VAT of 10, 20 at the port. And therefore, if you inflate that VAT you were claiming, you remember we said 20 minus 25, you pay 5. If I increase the 20 to 22, it means that I'm paying 3.
Exactly.
To 25, pay 1. Where is the system that validates that on the part of GRA? We are saying automation is feasible. It can be done. And that will increase compliance.
Okay.
And you see, the other thing is, where is the GRA system? Right, that is linked. Remember single window. Single window was supposed to capture all the information on the IDFs, which are a big issue, right? Because you are basing part of your IDF on customs import-export information.
Sure.
So how did we come to a point where somebody will falsify IDFs? Right? Of course, falsification is always a thing, but how come it's so massive? When in actual fact, it should have been just 5%. But now it's so massive. And the minister enumerated all of this. Now, a revisit of the single window, which will now include ITAS, will make sure that, did you import? Right? There should be a validation system. Okay. So I'm talking about the administration side and the compliance side, right, which has been hinted, and I'm giving examples of how they would, 1, reduce fraud, 2, how they would enable GRA collect the right, amount of tax, because they have information which now links, not just, the GRA, ICOMS and the GRA, but ITAS. How come ITAS, is not linked to GIFMIS? For suppliers, for contractors. That's the government's own system. Right? How come ITAS is not linked to that we're talking about ministries, departments, and agencies, the investors and the rest? All those who are, doing business with all of these things. This is what countries do. Okay. How come ITAS, there's no ITAS that links to the system for universities, hospitals, and the rest, which our government is paying them, and and they are not declaring, and they are not paying taxes.
So you want to be able to now track how much payments these people get when it comes
Precisely.
to the importers, right from how much tax they paid at the ports, the VAT they paid. So when you want to claim, how much they're claiming, but you also know how much, for instance, they have. So if they are selling, you can then infer, okay, so this is how much products you brought into the country. This is what you're selling. And so you cannot be under declaring.
You see, yes. And that is a trend. There are countries starting with the Scandinavian countries, and a lot of countries in Africa are now doing it because of that information. They have improved on this data collection using taxpayer numbers, tax office numbers, your input, which you must show on your import declaration, and other transactions, PAYE, which is being withheld, and when you go and the summary, they have improved on this system so much that at the end of the fiscal year, they consolidate all that information and give you an assessment and say, this is your information is in the system.
Oh, okay.
This is this is how much imports and others you have. If you have any, dispute with us, you can pay. You can protest.
You can protest.
Otherwise, you pay.
Okay, so they actually serve you, and then if you have any issues, then you can go back.
And that is what it means. That is where we should be moving.
Okay.
Because as the citizen said recently, and let me repeat, Ghana is going to become an upper middle income country if, on the other reform side, energy, right, Springfield is the news. Others are in the news. We empowered GMPC, to partner foreign investors. Here and now others come. Once we get the 4/5 oil field and we are able to bring the output back on the trade that we have, we will become an upper middle income country. And that means that we must have not just effective, compliance systems for revenue, but control of expenditure. Today we are not talking about expenditure. Yes.
Great. Please, expenditure measures in 5 minutes. We need to be wrapping up. Yes.
Yes, indeed. And again, let me draw attention to the summary, which is very useful. I was talking about digitalization. You can get it in specific paragraphs 222. Some of the measures I was talking, VAT receipts, ITAS, and all those. The Ghana Revenue Authority will roll out comprehensive public education. We said it. Of course, then there will be the review. We are focusing so much on the VAT Act. But in many countries, every 5 to 10 years, you have to update your laws. And so that also is an exercise that's going to be done. So it's not just the VAT that's going to be reviewed. But when we talk about the major, it means that the Income Tax Act will also come under review, critical review. The Excise and Customs Acts will come under critical review. The GRA Act itself, now that we have had GRA from 2009, it's time to see whether the way it is structured is helping us. What's the experience of other countries, and what can we, So, while saying that this will increase revenue, I'm also drawing to attention the fact that it's not just about taxes. The minister listed quite a number of officials that has been happening, and there are measures which have been listed, which will be done on the expenditure side, from procurement, to making sure that we complete the gift miss, the Hyperon, which is the budget element, the financial accounting component by the controller, the interface with Bank of Ghana, and with other, through the Treasury Single Account, which was put in force at the beginning of the years and help improve liquidity. So, and then of course, there are measures on debt. We have been, paying down the debts, the suspended debts. We've been, but it's burdensome. And I think that is therefore important when we talk about these measures to remember where we are coming from.
Sure.
Right. So that we are not expecting too much within a year. As we speak, we are still renegotiating some of the debts. But we have done, when they fall due, we harness and we pay them, resulting in the ratings. But there's a cost. There's a cost, why we must generate more revenue. Arrears that has to be paid, of both salaries, contractors, and the rest. IPP, some of this is under we remember some of the IPP, arrears have been cleared. Some of the debts that's due has been cleared. But do a restructuring of many of these things, whilst we take a breather and look back on what has been done. So all these are enumerated. The energy sector initiatives, it moves from revenue expenditure to sector. So if you have an interest in a specific sector like energy, transport, roads, those are also summarized here. Then you may ask yourself to then look at whatever else you are interested in, the big push, another mama cares, and all those are highlighted. Okay. And so we're looking at the totality of the fiscal regime, totality of the economy. And when you talk about economy, that's why BOJ comes in also with the effective management of reserves, linked to measures like the cleanup with the gold board is leading. We know cocoa is also being reviewed, a lot on mining. Of course, you can't have this without measures on galamsey, and all that. So this is a comprehensive picture, which I like to, to paint, so that typically it shouldn't be an assumption that all I talk about is tax.
Thank you very, very much, the Honorable Seth Terkper, for joining us